good to see all of you coming on this morning. We're going to get started here in just a little bit. We're waiting for everybody to get on board, and so consequently we will just wait a little bit. In the meantime, I will introduce our first speaker, Dr. John Kleinjan. He is from the Brookings area originally, has finished up his PhD here in the last couple years, and has taken over control of the crop performance testing program, and does lead a lot of our agronomy areas. And today he's going to be visiting with us about early planted corn. And so, John, if you want to take it away, and we will let you get started here. Looks like we got 53 people on, fairly good attendance, and we'll be ready to roll.
Okay, everybody hear me all right?
You're coming through good.
Is the right slide showing up on the screen?
Yes.
All right, well, seems like the technology is working, so that's a good start. Good morning, everybody. Just going to talk to you a little bit about planting early corn hybrids. We did a study in 2020 and didn't maybe find out what I had thought, but we'll get into that. And then I've got a few other things that we're going to talk about today as well that we'll run through briefly. So welcome to the talk today. So the main topics I'm going to go through, first I'm going to talk a little bit about my crop testing program, corn hybrid trials, just a few slides on that. And then I thought it'd be good to do a review of corn relative maturity, how the Minnesota corn maturity rating has come about and how it's calculated, or as near as we can tell. And then I'll get into the 2020 data planting study that I did, and we'll talk about that a little bit. That's probably the main topic today. And then finally, I don't know if most of you are aware, a lot of consultants I think know about a GDD website / tool that can help pick corn maturities or do forecasting, things like that for soaking dates. And we'll get into that a little bit. I don't know how useful it is, but I thought sometimes it's useful, sometimes it seems like there's some problems with it, but we'll talk about that when we get there. So the first thing I want to talk about is the SDSU corn hybrid trials. It's surprising to me that when I do winter talks, there are still people that do not realize that SDSU does corn and soybean trials. And honestly, we do wheat and oats, all the major crops, and that these results are published and available to farmers for free. So I just put the website there on the bottom of this page, but really the easiest way to find the results, I apologize, our website can be sometimes a little bit cumbersome to navigate, but just Google SDSU crop performance testing and that'll take you right to the banner page, and you should be able to find the crop that you're looking for from that page. So here's just an example of the 2020 South Dakota corn hybrid trial results in Brookings. Here's the cover page. So you can see I just put some cultural practices on the front page, you know, the soil type, the location, fertilizer, herbicide used, planting date, harvest date, things like that. And here's what we get for results. Here's how those are published. So in this case, the channel 199.60 was the top yielder. However, anything in boldface is statistically the same. So we had an LSD of 10 at this location, which simply means due to experimental error, things like that, anything that yields within 10 bushels of the plot winner is really the same thing. So if we did this experiment again, any of these would have an equal chance of winning the plot. You can see some of the companies that participate. We don't have all the big names in there, unfortunately. One of the things I tried to do different this year is I allowed the farmers to do their own checks. So in Brookings, I actually chose these. Farmer Check 1 is a pioneer number, and Farmer Check 2 is, I think, on the second page of these results. This is the early trial, so 100-day or less in Brookings. And so we're able to see if the farmers are cooperators, and we'll talk about that a little bit more on the next page, if they want to see how the varieties that they, or I'm sorry, not varieties, hybrids that they pick compare to what we're doing in the trials. So just a snapshot of 2020 here. Wherever there's a number on this map is where we do a corn hybrid trial. And wherever there's a green number, it's where the yields this year were above the 5-year average. The red number here in Brookings, we were actually below average in Brookings. I think we ran out of water, and we'll talk about that a little bit more down the line in this talk today. And then out here in Selby, Selby is only the second year of testing there, so I didn't have a 5-year average. And Reliance was the first year of testing. This is their first foray West River. As the corn and soybean belt continues to move west, I thought that would be a good addition. So just kind of an interesting snapshot on how hybrids performed in the state this year. We kind of got dinged by frost up here in Selby, and we'll see that, I believe, in the next slide. I'll talk about that. Miller, we kind of ran out of water, although still very good corn yields for the Miller area, I think. But overall, Jim River Valley, very good corn. Mount Vernon was outstanding this year. And Brookings, I think our 5-year averages in Brookings is around 250. So below average there, as I said, we ran out of water. So I kind of alluded to this before when I showed you the trial results page from Brookings, but each location is split into 2 trials. We have an early trial and a late trial. So for instance, Brookings or Volga, same site, 100-day or less is considered the early trial, and 101 and more is considered the late trial. Bath, the split is 95-day and below is the early trial, 96-day and above is the late trial. And then Mount Vernon is 103-day and below is early, 104 and above is late. And it looks like I forgot to put Reliance on this graph. So I found my first mistake in the talk today. But anyway, the take home from this, if you look at every location except for Miller, Selby, the late hybrids tend to out yield the early hybrids. And this is typically what you're going to see in South Dakota. On 5-year average, this is the case. Miller, we ran out of water in Miller, which is why I think the later performing hybrids did not do as well. Selby, we had a frost up there, which dinged the later hybrids more than the early. But in most cases, I would say both years in Selby, the early corn has done better, just because I think we run into frost issues up there. But in most cases, the late or full season maturing hybrids are going to yield more on average than the early. So this is typically what we see in yield trials in the state. Okay, moving on. I'm going to talk a little bit about corn relative maturity. We're used to using the Minnesota system here. Basically all the northern plains, that's what's used. So Minnesota relative maturity. And then we'll talk a little bit about how that relates to GDDs or growing degree days. I did not do an explanation of growing degree days today. I thought, I really didn't think it was necessary to get my point across. And I believe most of you know what I'm talking about there anyway. But just a brief explanation, if you have no idea, growing degree days are just units of heat. 50 degrees is the minimum, 86 degrees is the maximum. And you divide that by 2 and it gives you a number which tells us kind of an approximation about how much energy of it is available in a day for a corn plant to use for growth. So again, I didn't put the equation on. I didn't think it was necessary for today, but the whole concept of these corn relative maturity ratings is a little bit fuzzy. The important thing to know is, you know, we talk about 95-day corn, 96-day corn. You know, here in Brookings, I consider the optimum to be maybe 96 to 98-day relative maturity. And the important thing to note there is it's not directly related to calendar date. Okay, so it doesn't mean 95 days after planting or anything like that. And there's just a lot of fuzziness kind of involved in how this system is used. As agronomists, we're taught to understand that corn maturity is at physiological maturity. So a picture from Bob Nielsen here in Purdue, you know, we call that black layer in corn when basically when the growth of the corn kernel stops. That's physiological maturity. Often that is around 33% moisture. I think that's kind of the standard, but anywhere from 25 to 40% moisture can occur based on the hybrid. Now harvest maturity, and this is where it becomes kind of fuzzy because harvest maturity is maturity when you can harvest the corn without any damage to the corn kernel. And how do I say it? Basically when you can harvest corn and it behaves kind of like dry corn. So once you get down to about 25%, that's where harvest maturity comes into play. Now the problem is there's no really agreed upon standard in the seed industry. Minnesota is the only state that requires a maturity rating to be accurate. They say that to sell a hybrid in the state of Minnesota, it has to test within 3 days of the advertised maturity. But pretty much each company's on their own for their own ratings. I guess the good news is, I'll talk about that on the next slide. But if you look here in the lower left, I got this from Agronomy Advice Wisconsin. This is a little bit older data. If you guys remember DK 493, this was right when I was getting out of college. This was a very good hybrid for DeKalb. And this is looking at the Wisconsin maturity rating, which is very similar to Minnesota, okay? Wisconsin tried doing their own thing there for a while with maturity ratings. I don't know if they're still doing it. I honestly can't find any information on it anymore. So with Joe Lauer, I don't know if it went by the wayside or what, but if you look at this DK 493, they looked at it and did their ratings on it for 6 years here, all right, from 93 to 98. And it's rated as a 99 day, but really depending on the year, it was anywhere from a 98 day up to 101 day. So like I said, there's a little bit of fuzziness involved when calculating the relative maturity of a corn hybrid. The rule of thumb is, I found this in a reference, about 22 growing degree units. I'm sorry, I should have said GDDs to stay consistent. Growing degree to unit, growing degree day is the same thing, to about 1 day of relative maturity. Okay, this next slide here, and this is just kind of pointing to how GDUs or GDDs relate to relative maturity. And I should say, just because I talk about a specific company, so here I have DeKalb hybrids. I just happen to have a DeKalb book here in the office. So I took their rating to black layer and plotted it by their maturity rating. Just because I'm talking about DeKalb does not mean I endorse them over any other company. Every company's got a lot of good hybrids. This is just what I chose to use for this example. So basically what I did, plotted GDUs to maturity to black layer. Again, this is physiological maturity, not harvest maturity. So yeah, I'm sorry if I'm confusing you on that. We'll talk about that a little more on the next slide. Plotted it by their maturity rating. Here's the line that we get, R squared of 0.997. I mean, you never see that. So it's pretty much a 1-to-1 relationship there. And the Y value here tells us they're basically giving 25 GDUs or GDDs to every day of maturity. So, and actually if you take this 82 day, I believe it was 2050 GDUs to black layer and divide it by 25, you would come up with 82. So that's the system that DeKalb was using. I was going to plot a couple other companies on this graph too, but honestly, everyone was so close. I didn't see the value when I started looking at it. So everyone, the 3 companies I looked at Peterson and Channel and DeKalb, and they were all using pretty much the same system. So I'd like to think that 22 to 25 GDUs per day of maturity is pretty consistent across the industry. So just an example of how the Minnesota maturity is calculated. So this is what when we say 95-day corn, as I mentioned before, that's the Minnesota system. Basically, it's based on comparison of hybrids at harvest maturity. So like I said before, harvest maturity is when the hybrid can be harvested at around 25% moisture, so without damage to the kernels. So there's a lot of wiggle room there. I wasn't able to find a whole lot of information on how this is done, but basically it's based on 2 days of field drying, so 0.5 point of moisture per day. that counts as 1 day of relative maturity. So what they do, if you want to test a new variety, and we'll go through this example here, a new hybrid is tested against standard hybrid or a bucket of hybrids that they know are a relative maturity of about 95 days. So if they go to harvest and the new hybrid at harvest maturity is 2 points wetter than the standard hybrids that they know are 95 days, you take 2 days divided by half point of moisture per day, and you come up with 4 days relative maturity. And the new hybrid is rated at 99 days relative maturity. So that is the basics, the very simple basics on how that is done. So the next year that hybrid would be put in a bucket with 99-day relative maturity to see how standard hybrids, to see how it compared. And that's how they kind of hone in on what an actual hybrid matures at. And you guys have all seen that as consultants, as farmers. I know my past experience that a 97-day hybrid I used to plant a lot of, it was more of a 99-day. I don't know how each company is doing that specifically, but this should give just a basic review of how the days of maturity comes about. Okay. Okay, moving on. So the corn data planning study that I did this year, we'll talk a little bit about why I decided to do that and what we saw. One thing I wanted to point out in this picture, here's a picture of, this is the middle planting date here, which was May 15th. And then we had the last planting date here on June 1st. And you can see we have some light competition here. So this south is actually this direction to the left. And it's, I guess I learned if I'm going to do a data planning study to do the first planting dates to the north rather than to the south. I don't think this light competition affected the results at all, but it's just one more thing. It seems like every year you do an experiment, there's something you don't quite think of, and that was what I learned this year. So when we do this again next year, if the thing is oriented to the north-south, we're going to put the first planting dates on the south rather than the north. So anyway, a little bit of rambling there, but why did I decide to look at this? Just let's back up and look at the 2019 planting season. I'm sure it's probably something that nobody wants to remember, but I stole these graphics from FBN. If you look here, the left graphic is the 2019 corn planting progress on June 4th. And for the whole nation, look where no corn was planted on by June 4th. You know, you guys all remember this. Here's the soybean planting progress on June 13th on the graphic to the right. So, you know, the majority of the corn, I shouldn't say the majority, but a lot of corn in South Dakota went in June last year. And looking at my trials, so this was, remember the graphic I showed earlier, the 2020 results, how the late corn was better than the early corn. In 2019, okay, we saw just the opposite because most of this stuff was planted into June. So with the exception of Bath, up in Brown County, we had a little bit more of a normal year in 2019, I would say, than a lot of the areas of the state. So the late corn still did better. Mount Vernon, we had some green snap go through. So it really hurt the early hybrids. It just happened to come through, or I'm sorry, a windstorm that caused some green snap. It went through and it really affected the early corn hybrids more so than the late. It was just at the wrong growth stage. But other than that, the early corn did substantially better throughout the state. So I had a lot of calls, maybe not so much that spring, but that fall that said, hey, if I want to start planting some early corn, like a 80-day, what kind of yield am I going to get? What kind of yield reduction? So that's kind of why I decided to look at a planting date study. And just to look here, just to review, you guys all know this, but I really had a hard time finding any planting date stuff from South Dakota. We just haven't done a whole lot in recent years. This is a little fuzzy. This is from Minnesota. This is at Lamberton, Minnesota. And this is just review, you know, April 21 to May 6. So that's probably about the same as what we're going to say is the ideal planting range in the southern part of the state of South Dakota. Here's another graphic from Minnesota. When they added Morris and Waseca into Lamberton, April 25th to May 10th. I'd say that's a pretty good estimation of the optimal planting date for most of South Dakota. You know, that's going to shift maybe 5 days as you go north and 5 days as you go south. But so just kind of a review of what our optimal planting date is. It's kind of how I decided to set up the planting dates in this study. And yield by planting date in Beersford. So this is the data I was able to find from South Dakota. And to explain this here, this was from 86 to 2001, so a little bit dated, 20 years old now. Hang on, I'm going to take a drink here a second. Well, we have an early trial. The blue line is the early trial, so less than 103-day relative maturity. The late trial is the orange line, which is 110-day relative maturity, and then the gray line is the average of the two. So, I mean, again, this kind of points to April 25 to about May 7th or 8th. You know, Beersford's a little further south. It's going to be kind of our optimum planting date. And then as we get later in the season, and this would show up probably even more if we got on to June, the earlier hybrids tend to do a little bit better than the later ones. And that's just obvious. You know, the later ones don't have time to fill. So that's what we see in Beersford. The interesting thing is, and you know what, I'll wait and talk about that on the next slide down the road. So in South Dakota, and this data is from Wisconsin. I've got a couple different tables to show here. Sorry, this is a little busy. This is actually from a seed company, I guess agronomy handout, but this is summarized from University of Wisconsin. I could not find the original publication of this, but let's just look at 32,000 planting population. This is for some pretty early corn, so 70 to 95 day corn from April 20 to June 20. And, you know, they kind of yield the short season. The long season corn is better until you get out to about June 1st. And that's when the late or the earlier corn starts to do a little bit better. But, you know, you get out here by June 20th and you're only getting 5% of your normal yield or your optimum yield with the full and 18% of the short with the short season hybrids. And that seems a little bit, it just seems a little low to me. Here is some relative maturity zones, 95 to 115 day corn. So this is probably more like what we would see in South Dakota. Let's look at 32,000 plant population because I think that's about standard. Again, about May 10th, May 1st to May 10th is when you're going to see your peak yield. So 96% of optimum for full, 94% for short. And then as we get to June 1st here, the early hybrids start to take over and yield a little bit more. This should say June 20th, not June 2nd. They have a typo there. But as you get to June 20th, the early corn, you're going to get about 30% of your maximum and only 8% of the full. And I still think these numbers are a little bit low. But that's one of the reasons I wanted to do a study this year, so we had some data from South Dakota to look at. Okay. Here's some data from Channel Agronomy Advice. Looking at this, they looked at some different product maturities here from 76 day up to 116 day. This was done in Nebraska, and this was one planting date. It was June 17th. And the guy from Iowa State did a study a couple of years ago, and he kind of saw the same thing. So really in Nebraska, they didn't see any I guess returns to planting early corn. They didn't see that crossover that I kind of showed earlier, where the early corn starts to do better later. They didn't see it in Nebraska in this channel study, and they did not see it in Iowa State. So I kind of wonder if that's more of a northern tier type of explanation or type of phenomenon. You know, we tend to run out of season a lot quicker than they do. So here in Nebraska, I mean, they kept getting better yields up to 106-day maturity, and then they had a frost event that really took the top end off of these two. But that study they did in Iowa State was 3 years, and really the longer the hybrid, the better the yield for all 3 years. So they just probably had good weather conditions, but they never did see a case where the earlier corn did better than the later, even at late planting dates. But one thing I wanted to point out here, you know, you can see the 86-day corn kind of hangs in there relatively well in this study. Once you get down to the 76-day, that is just so far out of its range of adaptation. You know, that's probably designed for way up in northern North Dakota. And I guess as plant breeders, as agronomists, we know that cereals, especially like wheat and oats, they have a range of adaptation, and you get them out of there and it just doesn't work anymore. They just, I don't know the reason. I called the wheat breeder and said, you know what we call that? I mean, we all know it's there, and it's just 100 different environmental little things, but we don't know really what to call it. But I think that's what's happening here. Corn is a little bit more resilient because it's a hybrid, but some of these really short corns, short relative maturity corns, you get them out of their area of adaptation and they just don't seem to work very well. And it's not just a function of the short day maturity. It's just, I don't think they're growing where they're supposed to be growing. Okay. So I don't know how I'm doing on time here. I think I'm at about 20 minutes. I'll try to truck through here and get done. So here's what I did this year. This was 8 miles north of Brookings on some very good soil. I had 3 planting dates: April 30th, May 15th, June 1st. If I had to do this again, and I will do it again next year, I'm going to add a June 15th planting date. And I mean, weather permitting, those will be our target dates. But so you can, we have a 4-row planter, so we did a down and back for each planting date. And so I had 5 hybrid maturities: an 82, 85, 95, 90, and 100 day. And I didn't fill those in at all these, but this is replicated 3 times here, randomized. And then May 15th is the same thing. You can see on May 15th, we're already getting tassels on our 82 day, and then June 1st. So hopefully that's pretty self-explanatory. I drew some lines in here so you can kind of see the different planting dates. So study went in the ground great. Ideal planting conditions at every date. So I was pretty excited to see the results of what we would see this fall. So there was absolutely no difference to planting date in 2020. So April 30th, and I'll explain this chart as we go here. April 30th, May 15th, June 1st. And here are our hybrids. Each bar is a hybrid. But look at April 30th, 189, May 15th, 191, June 1st, 189. So no difference at all between planting date. It's not often that you see this, but the weather conditions in Brookings this year, we just ran out of moisture towards the end of the year. So the early planted stuff did not have the gas to finish out. And really most years, I don't think you're going to see a lot of difference between April 30 and May 15 planting date, depending on the back end of the year. Like this year, our August, September was just awesome grain filled weather, other than running out of moisture. So really typically I would not expect to see much of a difference between April 30, May 15th. And then June 1st, we just had a great August, September. So June was able to yield right in there with April and May. Looking at this a little closer, again, I used all DeKalb hybrids for this study, but I'm not endorsing their products. They were just generous enough to provide the hybrids for us to use. But we had 95, 100, 90, 85, and an 82 day. And really from the 85 day on up, they all yielded fairly the same. I mean, these are all statistically the same here, except for the June planting date. The 95 day did really well, but the 85 day and up above was statistically the same as the 90 and even the 100 day. So I think at this 82 day, we're starting to see a little bit of that getting out of the area of adaptation, like I discussed before. So, but still not too shabby. We're looking at about 90% of maximum yield here, 88% here, and then 83% here. So we didn't see any of the early hybrids catching up like we saw in that Beersford data that I showed before. So 2020 was a completely different animal than 2019. I did not see the results here of what I thought, but we're going to continue this again in the future. So anyway, just to mention moisture. So here's the May 15th planting date. I didn't put all 3 planting dates on this because I thought it would just get too busy. But this is, we went out and handpicked ears every week in September and then the first part of October. So look at September 14th, from September 14th to September 21st. This is the 100 day hybrid. We dropped 12 points of moisture in 1 week. And, look at, that's just almost unheard of, we figure usually a half point a day. So on a good week, 3.5 to 4 points of moisture, but 12 in a week, that's just crazy. And they're all doing that. So just shows kind of what an unusual year 2020 was. This was 50/84, so the 100-day moisture change for all 3 planting dates, but basically the same trend, you know, April 30th, May 15th, June 1st, they all kind of just followed the same pattern. We harvested on November 6th, and they were all down to 12% moisture less, except for this one. This is about 15%. So everything made it this year. It's frustrating not to see more differences, but this, I think we learned a lot too. So, what was I going to point out? Oh, just look at this is from the Mesonet website. So September 13th to September 21st, you know, that week we had 12 points of dry down. Look at the solar radiation that we had. We had almost maximum solar radiation that week. And then look at the winds. We had 20 to 30 mile an hour winds just about every day. I mean, here we dropped down to 15, but probably the most ideal weather of corn drying that I have ever seen. So anyway, just thought that was kind of neat. I'm running out of time, so I'm just going to be really quick on this last topic. This is the corn GDD tool published by the University of Nebraska. And here's the website. I can put that in chat if people think that's a good idea. But you go to the main banner page and you can click on any county in the Corn Belt. I'm sorry if you're in Pennsylvania, it's not going to work, or Kentucky, but you know, anywhere in the main Corn Belt. And so you can click on Brookings County and create a graph. And then here's what you get. So I put April 30th, and then you can either put in 100-day corn here, or you can put in your soaking and your black layer growing degree days for a custom kind of fit. And this was the DeKalb 50/84 that we saw. And so it kind of gives you a projected soaking date and a projected date of black layer. And if this was the actual website as you floated across things, it would give you, you know, the date and the value. This was the growing degree days that we saw in 2020. The purple line here is the average growing degree days. And then here's your average frost date for Brookings. October 3rd is the average frost. So you can kind of use this to pick a maturity of a corn based on a planting date. And usually you want to typically try to pick something that's going to mature about a week before the average first frost, right? Now that being said, there are some issues with this thing. I did find the soaking date to be pretty accurate when I plugged in all the numbers from the data planning study, but the black layer date, you remember this slide from before, black layer is usually about 33% moisture. Well, black layer occurred on these first 2 planting dates, April 30th and June 15th for this hybrid, you know, way back here on September 15th and maybe 16th. And really the model said it wasn't going to happen until September 25th and October 1st. And then it didn't say that it was going to happen for this June 1st planting date until November 6th, and it actually happened here around October 1st. So there's a little bit of fuzziness on how it figures out black layer. And, you know, I don't know what it is. We know that hybrids can speed up. I'm really running out of time here, so I'm going to have to go through this really quick. Hybrids speed up. Hybrid planted on June 1st requires 210 less growing degree days than when planted on May 1st. We've seen that. We did not see this in 2020. I think that might have been a little bit of a factor on why that GDD model didn't work. And I don't think it really accounts very well for hot and dry weather in September, October. So as I mentioned, that GDD tool is good to know about, but I think it's got some faults in it. So take home points from today. We all know this, April 25th to May 10th is still probably your optimum planting date for corn. Maybe shift that 5 days earlier if you're in the southern part of the state, and 5 days later if you're in the northern part of the state. Be careful with very early maturing hybrids. It looks to me like there's just kind of a little bit of a cliff from 85 day and below. So we talked about that, they're just not well adapted. I would stick with your full maturing hybrid till about May 25th. That seems kind of when the crossing point occurs, when you might want to switch to something a few days earlier. And as always, genetics are more important than relative maturity. You guys saw in that study, I don't think I pointed it out, but the 95-day corn did better than the 100-day. Sometimes you just get a good, really good 95-day corn. It's better to stick with that than to try to push the maturity with 100-day and pick up more yield that way. So I think I went over time. I apologize. If you have any questions, feel free to contact me. Here's my email address. Otherwise, the Q&A box is there too. So thank you.
Okay, John, Matt, if you want to put up the poll, and we got a few questions here for you, John, that we will do during that. What tillage practices were in place for the 2020 Brookings study?
That was conventional till.
Okay. And the poll is now, if you guys want to take that quick. Also, did you harvest 4 or the 2 middle rows?
We harvested the 2 middle rows, and that's why I don't think that we had much effect from that shading, that I talked about.
Why do you not include the major seed companies in your crop trials except as farmer checks?
I am glad that you asked that question. We send out entry forms to all the companies, all the big companies, and they choose whether or not to participate. So I can't force anybody to participate. They pay for this, and that's kind of what keeps my project going. It's an elective service. So yeah, I wish we did have more participation from the big guys, but that's just the way it is.
Okay, I'm going to share the code here, and so everybody that needs CCA credit, I will knock the poll down and give just a second for everybody to get their app up and going. Seeing that I'm doing it, that's what'll kind of determine the time here, because I've got an older phone and it takes about as long as anybody, and I've got her completed. So we're going to switch over, and I'm just gonna say Jack's our marketing guy. And Jack, if you want to whip your slides up and get going here, we're about 5 minutes late, but I think people, if we run a little bit over, will not be a concern. So.
I'll get back to the beginning of it. I didn't realize that it was had jumped clear down to the middle. Yeah, Jack Davis, I'm the crops business management field specialist out of the Mitchell office. So we'll get started today. I'm going to talk a little bit on the financial side, and then we'll go into corn market and what we saw fundamentally out of the January report, and also take a look at maybe some targets using some bar chart information. So 2020 ended up as a pretty good year nationally for net cash farm income. Highest level since 2014, 22.5% above the long-term average from 2000 to 2019. And it was 26% above that. And also then the same with net farm income. So we'll go through this pretty quick. So there it is, just kind of summarizing that from the last slide. Highest level since 2014 at 134.1 billion, increased by almost 25 billion, and almost a 23% increase from 2019, and very similar for net farm income. Now, a lot of it is due to some of our government payments that came in. As we see there, there was 107% increase over 2019. That's 24 billion. Much of that was a supplemental and ad hoc disaster payments. We had 32 billion increase, or 32 billion. It was an increase of 31 billion, mostly from the CFP rounds 1 and 2, and also then some as the PP loans, which right now kind of counted as income in being forgiven. Also then the MFP was what was authorized in 19 and then paid in 20. And we did have some payments on our government pay programs due to price and or yield losses. So a little bit in PLC, most of that probably on wheat acres, and the ARC on probably losses due to revenue or yield. So really, 2020 optimistic, but I would say probably still good dose of caution. Just breaking that down to South Dakota, our net farm income in 2019 was 26.7% of gross, and government payments were 10.4 of gross for our South Dakota farms as a whole. That equals about 38% of net farm income. So we don't, I think as farmers don't necessarily like to get it from the government, would rather have the market support it, but that's how it was in 2019 and helped producers make it through. If you've been to some of my programs or see me speak, I use a database called Finbin, and that's farm level records that is housed at University of Minnesota, and it's a database of those farm level records. And it's through quite a few states. I query that using Minnesota, North Dakota, and South Dakota and Nebraska farms. And then those are broken down into quintals. So I picked like the top 40% and then the mid 20% on 2019 cash rented corn. And what I'm pointing out here is the difference that we had a $92 an acre difference between this level, the top level, the upper 40%, and then the 40 to 60% as far as net income. We can see 77 was due to gross sales, and direct expenses were $15 less for the top end of that. I'll break it down a little bit more coming up here. So I did what's called like a management counting, a variance analysis. So we had a $92 difference in net income. $22 of that was due to the price received. So yes, marketing is important, but more of it is due to production and being able to produce more with less cost. That's where producers will get the most for their dollar. So yeah, don't give up on the marketing or price risk protection, but production is still much more important probably. So $70 was due to production. 26 was a yield advantage, that they got a better yield. So I held the price steady and just isolated the yield. And then $44 would have been due to lower cost per acre. Here I've taken 2,000 to 5,000 acre crop farms from 2019 and just broke down the upper is that 40 to 60 range and the high is the 60 to 80 range. So just can see not too much difference in acreage, just a little bit. About the higher end owns a little more of it than the lower end. Yields were in this year were quite a bit better on the higher end. And price, they got about 10 cents more on the higher compared to the low. One of the main things that I wanted to show here is change in earned net worth. So that is, we've got net farm income, we've got a positive net farm income, and we've also then kept it. We haven't spent it all. We've reinvested it in the farm, so we've increased that net worth. And there's what's called a rule of 72. So if you take and had a compounded interest rate of say 9%, you could divide that into 72, and that would tell you, just as that rule, you could double every eight years. So divide 72 by the compound interest rates. So if these businesses were able to maintain that level, they could double every 8 years at that 9% change in earned net worth. So I show that graphically on the next slide here, and I've also added then the mid 40 to 60. So I think we can really see as we get out to that 8 year where it really starts to separate for those that are able to keep more of what they have earned and reinvested in the business. You can see that accelerates, and they are able to double almost 3 times going through this 20 years. This is our mid level, which is at the 7%. And then the red line is the 4%, which was that 40 to 60 net income level. So one of the things that in our last run up, liquidity was real strong. And of course, that is the first defense as margins tighten, is a strong working capital or liquidity. And liquidity, of course, is can we pay our current debts or obligations from current assets so that we have enough cash or inventories to sell and meet those current payments that come due. We'd as a rule of thumb, we'd like to see that around 30%. Well, as we came into those tighter margin years and price decreases, that didn't hold. This is for our national level. This is where that's taken from. So that's down below 20%. So if we are fortunate enough to go back to some more profitable years, it's probably a good time to build that working capital back up. So now we'll switch over and talk about the marketing. So we're going to use WASDE report that came out the 12th of January, and we'll so yield was reduced 3.8 bushel from December. So our national yield, our final yield ended up at 172. December was at 175.8. So we still saw a decrease in yield when they completed the final survey. There's just a map of where that came from. South Dakota, this is compared to 2019. South Dakota was up about 12.5, Iowa down 10, which would be our big one. And then one of those eastern states that's red over here. Some of them, and then in the south. So total production then was down 2.2% from December. This is interesting. This is the WASDE report's final production estimate each month. So going back to June, they were estimating 15.9 billion in ending stocks, or total production, I should say. 15.9 billion bushel of total production. It went down in July, popped back up in August, probably got some rains, probably before those big storms hit Iowa, and also then before it turned dry. But we can see as our final, we're down 12% from June. And this really probably what drove our market rally this last fall and coming into this year was the industry expectations were off from what USDA was estimating or reporting. And especially November, they're not showing December here, but also then the final. So the industry was expecting, these are individual industry, as it says, expectations in here. There's about 12 or 14 of those. And so they were all above what the USDA came out with in these last few reports. So therefore the market reaction to the reports following it. Exports had our export year starts in September through August. So we're just into our first half or first few quarters here. They're up 72% this year, but down from the December estimate. And the total estimate for our 2021 year is 2.5 billion bushel. China is responsible. 80% of that increase went to China. So they have imported or claimed quite a few bushels. Well, as we all know, ethanol margins are low and production is down about 12% year to year. So USDA lowered its corn use for December by 100 million bushel. And this is the January or final January estimate of use for ethanol. Just showing a weekly production of ethanol in March when the restrictions, much of the travel restrictions were put in place, we saw a 50% drop in production from right before to when the restrictions were in full place and people were just not moving around. Currently, we're down about 12% on production of ethanol. So corn ending stocks are down 150 million bushel versus December estimate. But the key, I think that's very interesting, people are asking, why do we see such a market move late into the year? Well, early on, and also in many years, that yield estimate is optimistic, and we just saw it change continually through the summer, and especially as we got later, yields not being what producers had expected, maybe not what the fields looked like, and some of those storms that hit in August there taking that yield down. So down 50% from the June estimate. Looking at corn ending stocks as a percent of total use, the lowest we've been for 6 years. So with ending stocks to use of that number of that 10.6, we're starting to get into a tighter level of stocks to use. So anything that affects yield or use will have could have a bigger impact than when we're out here and have those larger buffers of say 16% stocks to use. We're getting back to that level that we were in 13, 14 type time frame. Okay, kind of a busy chart, but I wanted to just at least maybe throw out some targets. Not saying that any of these will be hit, or don't use this as to make your selling decisions. I would go more on what your crop cost you and your return versus these little targets that I'm throwing. But I just kind of wanted to give a picture of where we've been, and got to move this out of the way here. So what we're looking at is a monthly nearby over 10 years. So it's a futures contract, and what I've taken is what's called the monthly nearby. So each month it's going to roll to the newest contract, and it's a 10-year deal. So going back to February of 2011. And then I just took and drew some lines in here. This kind of being a bottom end, or where it fell off back in that time frame in August of 13. So showing that line. And then I thought, well, here's kind of the middle before it really went crazy in August of 12. I drew a line across there, and that comes in at 662 on this graph. And then I just picked a middle range, or actually off of the top of this as it started to fall in 13. The moving average is 20, and these Bollinger Bands is what is called two standard deviations off of that moving average. And I'll talk about it a little bit more on the next slide. Okay, so switched here in just using Bollinger Bands as a signal, and I used a bar chart, and their standard that they use for their Bollinger Bands is a 20-day moving average. So that is our black line in the middle, and then 2 standard deviations off of that for an upper and lower band. And what that does is give you a sell signal when it breaks out of that upper band. And then if you are a feeder, it would give you a buy signal when it breaks through the lower band. When volatility is low, the bands aren't very wide, but as we see volatility increase, they expand out. And this is a daily chart. I went back 1 year. So this is the actual July contract. And right now, if we just use this as a signal, it would be telling that maybe we should think of selling some if we have some on hand. So there's July. And I think the next one I'm showing December contract. Yeah. So here's the December contract, doing the same thing, make sure I got everything. Yeah, the daily contract went 1 year back. We can see that we broke out of that upper side in recent days. Doesn't necessarily mean that there isn't more upside, but it may be time to take a look at moving some of it. Again, depending on how it fits into your return. I think there's some opportunities for profit from the market, but we need to know our costs and lock them in if they're favorable. There may be some price risk opportunities You know, if we can keep like this, insurance coverage will be much better than it has been in recent years. And there's still a lot of unknowns, the growing season weather and whatever our return to normal is going to look like. This is my checklist that I like to use and have people use. You can pick a few of these. I think it's key to know your numbers, not only financially, but also production wise and what works and doesn't work on your farm. If you're not comfortable doing the price risk protection and you're of a decent size, I get pays to hire that out. It can sure help, especially if it's not something you want to do and you've ended up in the lower side of the markets over the years. I'm a firm believer in conservation practices, and part of that I think is just from where I grew up and where we currently farm at in the central South Dakota and in sandy soils. There's a rule of the 20/80 rule where 20%, if you can control 20% of the items, it'll give you 80% of the results. And that's where I come with managing those top direct costs. And the top two, of course, fertilizer and seed. Yeah, rents, I think you just have to know what each farm is doing for you. That really becomes a personal choice, and it is a tough one. Because if you give up acreage do you feel isn't being productive, your other acres have to pick up those fixed costs. I think we've done a really good job of kind of controlling capital purchases as we did come into this recent downturn of last 4 or 5 years. Some may need to still hold off on that. So be careful as profitability returns. And I think the first thing is build that liquidity back up and then invest for efficiency and operational. Sometimes farms are asked too much of the business. And so be careful in managing your time and make sure it's fully employed and you're only asking what the farm can provide to you. But that's what I have for today.
Okay, thanks, Jack. If there's any questions, please put them in the Q&A. Matt, do you want to put our poll up? And if you guys will fill out the poll. Also, while you're filling out the poll, we will have a debrief in another Zoom where all of you can talk and visit, and we will have that immediately following here. I have put the link for that in the chat, and so feel free to take and use that. When we get done here, we'll move over to that. Looks like we've got quite a good turnout on the poll there. I'm going to pull up the next QR code. I believe I gotta switch that. Don't take the code yet because we got to get to the right one here. And we will end the poll. And okay, have I got the right? Yep, I've got the right code up there. So if you want to get your CCA credits, do that now. Again, if you come back later to the CCA credits, you will not be able to get it if you are re-listening to it, or if you're listening to it the first time. The only way you get the credits if you're on live when we show that. And so everybody kind of got that. Okay, Matt is not seeing the link in the chat, so let me try and do that again.
It's in there now, Paul. I put it in there.
Ah, okay. I thought I had it in there, but it's showing up on mine to all panelists and attendees, but it isn't for some reason. So if you want to go to our debrief and move over to that. I don't see that. Do we have any more questions in the Q&A?
We had one question again on how to review it. And you had said those will be coming out like next week, a link
Right.
to this week's.
Yes, I believe Matt, isn't it? Aren't they going up about a week later? Is that what I'm? I know week 1 is already up. I checked that yesterday, but none of week 2 was yet, and so I believe that'll be coming up somewhere next week. Any other final questions? Oh, we got a question in the Q&A here. Let me missed the CCOA code for the first presentation. Sorry, I can't go back and do that because that would indicate that you maybe wasn't on there for it. And that's just the rules the way they are. Sorry about that.
And Paul, sorry about that. Yes, the like this week's videos are now up in that playlist with the other ones. Oh,
okay. Well, then if you need to go back and see something, make sure you do that. So with that, let's switch over to the other link, and we will visit a little while. We had some very good discussion yesterday with a lot of people, and so let's do the switch over, and we will go from there. Thanks everybody else for being on today.